The US is producing less. Last month, market research firm S&P Global's Purchasing Managers Index dropped to an 8-month low. It reported production cuts for the first time since January, while a separate report showed construction investment fell in July. It follows an uptick in unemployment. The high interest rates have meant companies are spending less and are more cautious when it comes to hiring. Markets fell significantly on the news. Some analysts expect this volatility to continue until the US presidential election in November.
We know that October is often a worrisome month, and this year just will add to that because we're going right into the final days of the election. This election continues to look like it's a very close election, and so that just adds to Wall Street uncertainty.
That's because the two presidential candidates have very different views of how to manage the economy.
A reduction in the corporate tax rate from 21% to 15%, solely for companies that make their product in America.
Well, instead of a Trump tax hike, we will pass a middle-class tax cut that will benefit more than 100 million Americans.
But interest rates are out of presidential hands. Setting them is the job of the apolitical Federal Reserve and its chairman, Jerome Powell.
People are getting concerned about election, about potential recession. So all that fear is coming into sentiment, which is causing markets to sell off. And everybody has the spotlight on Jerome Powell and the Fed right now. We know they're behind the curve, so to speak, with interest rates being way too high compared to everybody else, all other central banks around the globe.
Powell is widely expected to lower interest rates next week, another signal that the US economy is likely at an inflection point. It's also high on most Americans' minds as they will vote in November for a candidate they want to see shape economic policy for the country for the next 4 years and end up here in the White House. Kate Fisher, CGTN, Washington.